Well, started off trade on a fair amount of global weakness. In fact, you had as deep as a 2.5 to 3% kind of cut coming in the Nasdaq. You had the rest of the global or US indexes as well in the red, and that was the case with Asia as well. Reason being that the Fed commentary suggesting that there could be 3 to 4 hikes, which is something that the earlier dot plot as well suggested, that clearly did not go down well with equity markets, which have really been seeing a one-way move up. Call it the Santa Claus rally or the New Year celebrations, they have sure continued. For us as well, we saw 4 consecutive days of a smart move coming in for our markets, and that definitely took a bit of a pause today. Nothing out of the ordinary or nothing out of the box. We just fell, aligning ourselves with the rest of the globe. So what was indicative of a 0.5% downtick, that obviously closed in pretty much around the session lows. About a 170 odd point cut is what you closed the day with. Just a smidge around that 17,800 level in trade, and that's a dip of about 1% coming in. But again, you know, a 1% fall in the context of 4 days of a very, very steady move. The fact that yesterday we made it almost near to that 18K mark, that seems a little bit negligible. Are we going to, quantify or qualify today's weakness as weakness? Clearly not. It's at best just profit taking. And I say that because if you do monitor how the various pressure points today panned out, metals sure were the weak point. Cement as well saw some weakness. So Ultratech Cement, Shree Cement, Aramco Cement, these were all rank underperformers. But IT, for instance, the sector is due to report. Many large caps are going to report their numbers come next week, exactly a week from now. And IT, given that it's had a one-way move up all through 2021, or for that matter in the past 4 days as well, that saw dips of about 1.5% to 1% coming in, and that really, in that backdrop of the gains that they've made, seems a little bit negligible. So you had a TechM, you had an HCL Technologies, TCS, Infosys, these were all rank underperformers today. Reliance as well weighed heavy on the indexes today with a 1.7% cut. That was pretty much the case with an Adani Ports, with an HDFC Bank as well, which was in the red today. There was L&T. There was also DRL, SBI Life, Tata Steel. These were all rank underperformers. On the flip side though, autos as a pack held out very smartly. So everything from an Eicher Motors, which in any case has been holding up quite well after its December sales data, or for that matter, you had Bajaj Auto, which perked up about 2%. There was Maruti, which held out by about 1%. And of course, some other plays like a UPL, which saw a brokerage upgrade coming in earlier today, about a 2.5% uptick coming in there. And then IndusInd Bank, which jumped up about 1.6%. So it was a pretty much split and divided market. NBCC, for instance, shot up 8% in trade today. Delta Corp saw some very decent moves, about a 5% uptick coming in there as well. You had a Gujarat Gas hold out very well. Motherson Sumi and Bharat Forge auto ancillary plays, they also looked very, very smart. Thermax, of course, the auto inflows are looking very steady at about 5.5 billion rupees. So that was another stock which was in focus. Lodha, given the positive update coming in from their UK business, that also was another stock which was in focus. And then of course, you know, the big medical news continues to loom large. That is the spike that one has seen in COVID cases, which is now almost closing in on that 20,000 figure in the city of Mumbai alone. So that of course, is something that the market was also paying heed to. But that said, it's pretty clear that today we aligned ourselves with global cues. This afternoon, when we were shutting shop for trade, the US futures were indicating just at best a marginal soft start. So let's see which way the global markets head and where we pick it up from there.